Hello everybody, welcome back to Great Sadhana. I know it's been a really long time since I have last uploaded my video. I've been working on something interesting and so I will make a separate video on that. In today's topic, I will be going over my trades of the quarterly two. So as you all know, financial year of 2025 and 2026 has been ended as of March 31st. And from April, it's a new financial year of 2026 and 2027, which is also a quarterly two. As you all know, in a year there are 4 quarters, right? Q1, Q2, Q3, Q4. So every 3 months is a quarter. So beginning of this quarterly two, I want to improvise immensely in my trading journey. So I've been doing really good as of past month. I'll show you my stats and also I will show you my best rates and the worst rates as of Q2, meaning that from April 1st to April 10th. So without any delay, let's get into it. So this will be our bi-weekly recap from April 1st to April 10th, and also as a bonus, I'll be doing my weekly preparation as well. As today is Sunday, at least for me, so market is opening probably in like 2-3 hours. You can see how my thought process is and how I make the game plan for the coming week or the coming months. As of Q2, these are my stats. I made a gross PNL of around 7,700 and my net PNL after giving all the commissions and the charges, so I made around 5,600 rupees, which is not a lot, but if you think in the long term, because trading is a long term game, you have to build your foundation really well so that you don't blow up your account back to back. Once you know what you're doing, then it's just a matter of you sizing up on your positions. Okay, so I'll also talk about that in a bit. I won't be going on all my trades that I took. Right, so I think I traded almost 6 days in the month of April. So I'll be picking my best trades and the worst trade and what you guys should learn from my mistake. Okay, my best day on the month of April is what I would consider. I mean, I know you can see the PNL, right? People assume that okay, making more money is a good day, but no, in trading it works differently, right? You can be a good day, like money wise, but it could be a worst day for your own setup. For me, a good day was on April 9th. It was really good. I capitalized on I traded just one trade on that day, and there was one more beautiful setup that I missed. That happened because I had a losing day on the previous day, right? So on 8th of April, I had a loss of 1,500. I'll explain why I took that trade and why I should not have took that trade. But yeah, coming to my best day would be my April 9th, I would say. So my playbook setup on that day was a reverse opening drive. I think that's what I capitalized on. You can see my entries, you can see my exits, you can see the entry price, exit price with the time and the date. And yeah, so one mistake that I did was that I was fearful to enter up to the next trade despite there was a good setup. Okay, this was my mistake on that day, because if I had capitalized on this one, the premiums would solid 100%, so I could have made another 3 to 4,000 on that day. So let's go to the charts and see what all things that I identified on April 9th. April 9th would be after the huge gap up. As you all know, the Trump, after commenting that there would be a ceasefire with the war, so the Nifty 50 itself gapped up almost 700 points. So that is this gap. That's why there is a hike in this price. Okay, and today, as of now, the ceasefire has been cancelled back and the war is beginning back. So that's why, I don't know if you guys know, that Nifty has been dropped already. Not just Nifty, even S&P 500. So this is the chart of April 9th. As I'm trading from Canada, so I am behind 12 hours. So you guys can see it's April 8th my execution was, but it's 8:48 p.m. Okay, not in the morning. So whenever it's April 9th in India, so it's April 8th, but it's evening. So I'll be trading on the 9th. So yes, so this, what you're seeing on the left side is the 1 minute chart, and this is the 5 minute chart. I'm putting you guys both together so that you guys understand what my thought process is while taking my entries and exits. So my first entry was around 8:48. Okay, here the market opens around 8:45 p.m. at the night. So I entered around 8:48, which was this candle. So this candle I entered with 2 lots, and my entry price was around 181. As soon as my candle opens up, why I decided to enter for a call, right? So that should be your first question. I had an intraday key level from yesterday where the price bounced off. As you can see, this is where the price held, and that was my intraday level. As soon as the price opened up, it flushed down. It was a gap down day, but still I played out for the long side. Price pushed into the key level. As soon as it pushed into the key level, buyers stepped in aggressively. I can see in the tape that the buyers are stepping in really aggressive despite the sellers. So once it pushed above the VWAP, I was like, okay, it might reverse from the opening print. Opening print is right when the market opens, the first price, it's called the opening print. So I waited for the price to go right above the opening print for my entry. That's why my entry was around 848.47 during the end of that candle. So as you can see, this was my entry here on the 848 candle, and I entered with 2 lots at 181, and then my exit was around 950, 2 minutes right after. So 950 is on this candle. As the premiums were pushing higher, I wanted to take something off. So I took out around $195, rupees. And then my last exit was around 858. 858 is somewhere here on this red candle. So what I do is right after my first scale out, I'll push my stop loss to my entry price so that I don't want to risk anything in that particular trade. So as this was pushing up, this is 1 minute chart. You guys can see how the 5-minute candle looks, right? It was looking solid. The volume was really good. So this is the first 5-minute candle. This is the second 5-minute candle. This is the third 5-minute candle. So I entered somewhere in the first 5-minute candle itself and scaled out on the second 5-minute candle, and then held my runner by pushing my stop loss. So 858 was my exit on my runners. That was somewhere on this candle. But right after this, okay, so that's what I wrote down here. I missed the MTR. MTR is morning top reversal. So that is my playbook, one of the go-to playbook that I usually use. So that is usually when the price pushes higher and the volumes are dropping out, that means there is no interest coming from the buyers to push the price even more higher. So the only thing that will happen is reverse right from that point, and that's what exactly happened. Right, I was watching the premiums right after when the price pushed down below the VWAP, and when this 5-minute candle closed as a doji, which was a highly confident thing, because even if I had entered here, I could have captured up until the low of the day. The premiums moved 100% on this move. Look at the volume as it was flushing down. So that was the one big thing that I missed out on this week, and that was mainly because I had a losing day on the previous day. So yeah, right after when the push happens and the price stayed below the VWAP, look at the move. It was so clean, right? But yeah, whatever happened. In trading, could have, would have, will never work. Whatever you did, executed, only that matters. So now this was my best trading day, and the good thing that I did on that day was that I was fearful, but my plays were really good. It worked out really well. So coming to my worst trade, that would be on April 8th. April 8th was a news day. I don't know if you guys checked the news before coming into the trading session, but I would recommend you guys to check out the news before stepping into the market. So on April 8th, there was a news day. So there were 2 news. Okay, the first was already decided, right? Decided meaning that the RBI has scheduled to cut the rates or not cut the rates on that particular day. Whenever these kind of news are there, the premiums will be priced way too much. Why? Because of the IV. IV is implied volatility, right? So these terms are all comes under option Greeks. If you guys don't know what are option Greeks, please do not trade options. Okay, it is highly risky. So on that day, the 10:30 Indian Standard Time, RBI had a session whether to cut the rates or not, and the decision outcome was they did not cut any rates. It was a pause, and that was one side. And the other side was that the unexpected news, which was Trump tweeting that okay, we are pausing the war for the next 2 weeks. Because of this news, the IV has also been pushed higher. With that, was a news. Okay, so this gets really interesting. So news came out, the 2 weeks pause, and the Nifty gapped up 700 points, and there was a news as well. Okay, so IV crush was happening right at the open. Okay, no matter whether you buy calls, buy puts, it doesn't matter. If the price stays or even price goes in your favor, you will be losing money, and that's what happened to me. So first of all, whenever there is news, I don't usually trade. So that was my mistake, jumping into the trade despite there was a news. I should have waited, or I should have not even took the trades on that particular day. So yeah, but at least I exited with it. With the trade was within my risk, so I took just one trade on that day because I knew I had fucked up on that day. So my loss was 1,500. With all the commission, it was 1,600 rupees. So let's go into the trade and see what we could have done. So that was April 8th. So for me, it will be April 7th. Okay, so here is the April 7th. This is the 1 minute chart and this is the 5 minute chart. My entry on that particular trade was around 848, exactly after 3 minutes of the market open. That's where I usually take. So I call this as an opening drive. And my play on this was that the news catalyst. Why I was prone to take this trade was because, okay, Trump has commented and the price has been gapped up crazily. You can see here. So the premium, the prices was around here 23,200. And by the way, I'm seeing the April future. So spot price works differently, futures price works differently, but the price action wise, it all the same. So it closed 23,200, but as soon as the news came up on the next day, it gapped up 700 points. It opened around 23,800 and it was pushing higher. So I saw that as an opportunity despite there was a news around 10:30, and then I took a stab right around 848. 848 was, yes, this red candle right here. My guess was that, okay, the price is pushing, the price is above the VWAP, so that even if I'm taking any trade, this would be my stop loss. So it pushed higher, break out of this 1 minute range or the opening print, the exact same play that I took on the April 9th that I just showed you. So I was waiting, okay, let the price hold or at least pull back for my entry. So this 847 candle happened, then comes the 848. So whenever that candle stopped, so that was my entry. So I got in around 196. I entered with 2 lots and at 848. My entry price was 196 and I held. So in this pullback, I saw the premiums were losing value. I instantly knew that shit, IV crush is happening. Okay, why? Because of the two things. One thing was the news from the Trump, and the other thing was the RBI rate cuts. So premiums were inflated already. With this news, the price has to stabilize at one point. So that was happening, and I could see in real time, despite the price pushing lower, it was losing so much value, and even after pushing even higher, so my entry was somewhere here, and you can see the price went even higher, right? At this point, the premium price did not even return to my entry price, meaning that my entry was around 196. When the price pushed down, the premiums went to 170. Okay, when it pushed back higher, the maximum it came was 190, which is not even close to my entry point. Okay, so then my exit was 852 was on this red candle. When the red candle was pushing down, even after me seeing the price going higher, but my premiums was not moving, that's when I decided, okay, I did a mistake, I should have not taken the trade, I'll exit. Rather than me giving more loss than whatever I have intentionally risked for, right? So that's where I cut my trade right here and then I called it a day. So that was my worst trading day and the best trading day. Okay, so the worst and the best trading day doesn't mean that in a money value, right? It comes down to how you see the market and how you execute. And I should also show you guys one more stuff. That was, I think, yeah, April 10th. April 10th was my, tilt kind of day. There is in trading they call a world tilt, meaning that you will be on some other dimension taking trades despite you don't know what the fuck is happening, right? So that is what tilt. So here, yes, I closed the day on a net 491 rupees or the gross of 1000 rupees. Was it even worth it? No. And look at the amount of trades that I took. And I took 5 trades, 3 was winning and 2 was loss. But was it even worth it? So look at my entries. 855 was my first entry and 856 I instantly sell it back. Okay, so that was the regret. So and my stop loss is usually around 15 to 20 rupees, and my take profits will be around 10 to 40 rupees. So in a percentage wise, you should always calculate in a percentage wise. That is the one thing that I'm trying to implement on my next coming weeks. I'll try to cut down from the 10 rupees itself, because whenever I'm doing the market buy or market sell, you will see the slippage that's happening. Right, you'll see the price at 155, but the moment that you buy it, your order will be triggering at 156. So this will be happening. So right after that, at 9 o'clock, I entered back again for the calls. Right, same setup. I was chasing the same setup on that particular day. Again, my entry price was 159. Premiums was not moving. Again, I exited. Right immediately after that, again I entered, because the price was coming back. Like, okay, it might push now, it might push now, because it's been almost 15 minutes since the market opened, because market opens here around 8:45 p.m., which is 9:15 a.m. in India. And I was chasing. Immediately after exiting, I entered back, because look at the premiums. If I had held this position, at least I could have exited here, even with 5 rupees of profits. But I did not do that. I exited at the low, I re-entered back at the high, and then I was so patient that, okay, I took already 3 trades within the 10 minutes of me taking the first trade, which is not healthy. Okay, so that was my mistake, chasing setups and changing bias. Why changing bias? Because I'll show you. So 934 was my exit. Look at the premiums, it did not even move. I'm like, okay, fuck it, but the price was going higher and higher. Then I changed the bias. Immediately it pushed down. I'm like, okay, 935, entered for a put. And this is the mistake, because I had a game plan. Okay, I had my key levels. Still, I was entering based on whatever that I feel on that particular moment, which is not healthy for the account. And these are not the good habits. Okay, you should develop a good habit. So 835, I entered for puts, and I exited in green. But was it even worth it? I don't know. No, it is not. Okay. And then finally I took the last trade. Okay, fuck. Because even after changing this put, because I was already down, I think almost 3,000 rupees on that day, I take this last trade. See, this is a bad habit, that you are digging a deeper hole as you go through. But then I saw some volume was picking up. I was like, okay, I'll take this trade. If it's not working out, I'll close it on minus 4,000 and then walk away. Then 940, I entered back. Why I entered back? Because the premium price came back. I'll just show you guys chart itself. So yeah, this is the April 10th price action. This is the place that where I took the put positions by changing the bias. So for the calls, I think I entered somewhere here and held the trade up until here. And you can see I entered for a puts because that was my morning sell. I thought it was happening. As the price was pushing higher, there was no volume on the green side. The red volume was much higher. I'm like, okay, it would dump. It dumped and I made profits. But then my initial game plan was to look for the call side. Why? Because it is bouncing off my key levels. Right? And look at this. Right after this 5-minute close, I think I entered back into the calls. That was my last trade, which was around 940. So 940 was, yeah, this guy here. This is where I entered for a call. Why? The 5-minute closed really well with good volume, right? And it wicked back right from the key level that I had, and that was this. And it closed right above the VWAP. So I thought, okay, if I entered here, I'll scale out one at the high of the day, and I'll leave the runner on the next one. And that's what happened here. My entry was around 940. My first scale out was 943. And this was a good price action. The premiums were moving really good. The buyer stepped back in, but I made almost 4,000 rupees on this one. That's why my gross was overtook my loss, which was a good thing. But still, I took 5 trades. I usually cap out at 3 trades, maximum 4 trades, because this market with all the news, it is not the time to either you scale up or scale into your position, or to take more trades. The less number of trades is much better. So I took trading for full time for 5 months, and I'll make a video on that, and I'll actually show you how the data look. If you guys are planning to take trading for full time, I would suggest you guys wait for this video and then decide whatever that you guys want to do. So yes, so as of this video, this is what I wanted to convey. Look at the commissions that I'm paying, like 500 rupees. It's not even worth it. And I'll show you commissions that I paid in the last 5 months of me full-time trading. Oh my god, it's immense. If you want to see now, let's discuss how the coming weeks might affect us. So this is how I usually do my game plan. So I'll go to the weekly candles. I don't know about any indicators that I have. I usually don't use any indicators, just the VWAP, because I feel the indicators are all lagging and they are not leading. If you are day trading, you should be the leading one, not the lagging one. because you miss a lot of stuff. Last week was really intense. The price has pushed last 4 weeks of whatever that it was, and with a really good volume. It has broken down all the resistance level that we had, and it is pushing higher. But based on whatever that I'm seeing right now, probably Nifty will open gap down and hover around, could be a inside week of the last weekly candle. That's what I'm assuming. But if the candle closes above 24,000, it would be a really well play for the next upcoming weeks. Your portfolio will be green again. So my main watches will be the weekly high and the weekly low. Should be this. This is the weekly high and the weekly low with respect to my March 16th weekly high and the March 23rd weekly high. So I'll see how the price reacts in these key levels, and then I'll make the decision. So if the price action stays within the last week's candle itself, like inside candle, it would be really worst price action, I would say. But as long as the price holds the 24,000, which is the main psychological level, I think we'll be seeing some bull run in the upcoming weeks. Again, that all depends on what the news is and how the markets reacts to it. And you will be profitable based on how you react to what you read. Okay. So by saying this, I'll be ending this video and I'll see you guys on the next one. Hopefully this was helpful. At least it was helpful for me. And yeah, wait for my next video on what was my progress on my trading full time for the 5 months. Until then, take care, stay safe. Bye.